For 50 years, Warren Buffett has preached one simple rule, a rule he has lived by. And then, in 2020, he just threw it all away, making a $500 million bet on the one thing he claims to hate most. Today, we're going to decode the secret history and the hidden math that explains this shocking move. And it all started on one very specific day.
Okay, so picture this. It's August 14th, 2020. This is the day that 13F filings drop. This is basically the secret report card for the world's biggest investors, showing what they've been buying and selling. And when people saw what was inside Berkshire Hathaway's filing, the entire financial world just stopped.
Tucked away inside all that paperwork was this number, $565 million, an investment in a company called Barrick Gold Corp. I mean, this is the guy who spent decades, calling gold a useless pet rock, and he had just bought a massive stake in a gold miner. You can imagine what happened next, right? The internet just went nuts. Everyone was asking, has the Oracle of Omaha finally lost it? Is he caving to fear? Is this a signal that the whole system is about to collapse? It all boiled down to one huge question. Why did he betray his most deeply held principle?
But here's the kicker, the part that almost everyone missed in all the chaos. This wasn't the first time he'd made a move like this. You see, 2 decades earlier, Buffett made an even bigger, even more secretive bet on another precious metal. I'm talking a trade so massive it almost cornered the entire global market. And that story, well, that's the key to everything. So, to get why this was such a betrayal, we have to rewind a bit. We've got to get inside Buffett's head and understand his whole philosophy. Why does Warren Buffett seem to hate gold so much? It's not about the shine. It all comes down to something he calls the math of productivity.
In this quote, it's his whole argument in a nutshell. See, for him, a productive asset is something that works for you. Think about a farm, right? It grows crops. A factory builds stuff. They generate cash. But gold? What does it do? It just sits there. It does nothing. It's the laziest asset you can possibly own.
And the way he explains this is just brilliant. He says, okay, imagine all the gold that's ever been pulled out of the ground in all of human history. Every last ring, coin, and bar. It adds up to about 170,000 metric tons. If you melted it all down, you'd get one single solid cube. And that whole cube, it would fit neatly inside a baseball infield. That's it. Now, back when he made this argument, the value of that one silent cube of gold was, get this, a jaw-dropping $9.6 trillion. So keep that number in your head because here's where it gets really interesting. He gives you a choice. You can have the cube or something else. This is where he just drives the point home. For that exact same $9.6 trillion, you could buy all the farmland in the United States, plus 16 companies the size of ExxonMobil, one of the most profitable corporations on Earth, and you would still have $1 trillion in cash left over just to mess around with. So think about it. 100 years from now, that cube of gold, it's still just a cube. But all those farms and companies, they've been working for you, producing trillions upon trillions of value. It's a no-brainer, right? Okay, so his logic seems pretty bulletproof, right? Lazy assets versus productive assets. Well, that just makes this next part an even bigger mystery. If his math is so crystal clear, why on earth did he secretly buy 129 million ounces of silver back in 1997? Let's go back to 1997. Silver was, this boring metal, trading for just a few bucks an ounce. But Buffett, he wasn't looking at the price. Nope. He was looking at the inventory data. And he found this crazy anomaly. The world was using up way more silver every year than all the mines on the planet were able to dig up. You gotta remember, silver isn't just for fancy rings and necklaces. It's a critical industrial metal. It was vital for old-school film photography. It's in our electronics, our batteries, tons of other applications. So the world was literally chewing through the available supply of silver, and Buffett realized, hey, sooner or later, the shelves are going to be empty. So what did he do? Very quietly, Berkshire Hathaway started buying. And I'm not talking about paper contracts or anything like that. They were buying the actual physical metal, the real deal. They built up this massive position from July 97 to January 98. And of course, when the news finally leaked out in February, the market totally freaked out, and the price just exploded overnight. He held on for a while before finally selling it all in 2006.
I mean, it's really hard to wrap your head around just how big this trade was. In a little over 6 months, Berkshire bought 129,710,000 ounces of physical silver. So what does that even mean?
Well, here's what that number actually means. That one purchase by one company was 37% of the entire world's annual supply. He bought over a third of everything that was mined that year. See, he didn't buy it because he fell in love with silver. He bought it because the basic math of supply and demand was just completely, fundamentally broken.
And that secret silver trade? That's the Rosetta Stone. That's the key to cracking the whole 2020 gold mystery. Once you understand the silver play, the Barrick gold move starts to make a whole lot more sense.
Okay, this right here, this is the absolute heart of the matter. The whole thing hinges on this one critical distinction. All the gold fans out there, they were cheering, right? They thought, he's finally seen the light. Buffett's a gold bug. But they totally missed the fine print. He didn't buy the lazy, useless rock. He bought the hard-working, productive business.
I mean, look at this. This chart tells you everything you need to know. A bar of gold, it generates zero cash. It pays you nothing. It just sits there. But a gold miner, like Barrick Gold, that's a real business. It has people, it has trucks, it pulls gold out of the earth and sells it for a profit. And best of all, it generates cash and it pays you dividends. So when you see it that way, the logic is actually pretty simple. The pandemic was scaring everyone, which was pushing gold prices up. But Barrick Gold's stock price, it hadn't really caught up yet. It wasn't fully pricing in all the extra profit they were about to make. It's that classic Buffett move. He wasn't buying the crop, he was buying the whole farm, and he was getting it at a discount.
But wait, there's one final twist, and this is the part that proves, without a doubt, this was just a quick trade, not some lifelong conversion. He got out just as fast as he got in. The very next quarter, he dumped 40% of his stake. And by the end of that same year, poof, it was all gone. 100% sold. The whole thing lasted less than 6 months.
All right, so let's put it all together. When you look at the math of hate, the secret silver trade, and that super fast gold flip, you start to see this really clear playbook emerge. This is basically Buffett's secret rulebook for when it's okay to bet on precious metals. It really just comes down to these 3 simple ideas. Step 1, the main rule. Always, always go for productive assets, the things that actually make stuff and make money. Step 2, the exception to the rule. You can buy a lazy commodity like silver, but only if the supply and demand math is totally, completely broken. And finally, step 3, the loophole. If you absolutely have to ride a wave of rising gold prices, don't buy the rock, buy the business that digs up the rock. And that's such a powerful distinction, isn't it? Buffett didn't become a billionaire by hoarding a pile of metal, just hoping someone would pay more for it later. He got rich by finding and owning great businesses. And sometimes, for a very, very short window, those businesses just happen to be in the business of digging up those rocks. And that really brings it all back home, to a question we should all be asking about our own investments. It's super simple, but it changes everything. When you invest, are you betting on the rock, or are you investing in the business?